Well, the first take on these numbers is that we believe in two things. One is consistency. We think that our shareholder deserves a certain degree of predictability in our results. So we're very happy that we again delivered somewhere upwards of 30% year-on-year growth of this Q3 FY on the base of Q3 FY24. We've again grew 33%, and that's the mean result we've given of growth over the last 13 quarters. We've been listed. So that's one thing which is good. Second, I think we also try to build a financial services business which is agnostic to market conditions. So this was the second worst quarter in terms of Nifty performance. Even after we've got listed, Nifty was down about 9%. In a quarter like that, especially most people assume that a financial services business will do badly. So we feel very happy when clients trust us more during bad times. The sentiment has not been the best for the last quarter.
Right.
And I think in that period, if our results have done well, so we've given agnostic market results being a financial services firm.
Sure, definitely, for sure. But my next question to you will be around the AUM growth. It is nearly flat at about 76,000 versus 75 last quarter. So this being flat, can you talk to us about what is playing through and your assessment of AUM growth, and also how much of this AUM is fresh flows for you?
Let me explain. The AUM is flat, as you said, 75,000 up to 76,400, 2% in a quarter, which I think is 1,500 crores. This is last quarter has been the best ever quarter in terms of net flows. We collected about 3,400, 3,500 crores in a single quarter when Nifty was down 9%. So if you have to assume that the portfolios would also be down, so this is the number which actually nullifies the market movement downwards and still has added about 1,500 crores, owing to the fact that this has been the most generous from our client standpoint in terms of they giving us a larger wallet share, and we are acquiring reasonably large number of clients, which has resulted in 3,400, 3,500 crores of fresh flows in a single quarter, which is the highest ever for us as a company.
All right, got that about AUM, but tell us more about what your clients are sensing as at this point. Do you see a concern around the client side based on the markets right now, and what are you particularly advising your clients?
Firstly, I think nobody's happy seeing a lower number than what they saw the last quarter when it comes to their own portfolios. People like to see a linear curve upwards. But I think we as a wealth management outfit have been very clear that we educate our clients that it's not going to be a linear curve. If it's a linear curve, you would have rather had an FD in your portfolio, and then you would have deserved only 5%, 6%, 7% return, that to pre-tax. So most of our clients are long-term clients, and they've been very clearly sensitized that market shows a 10% correction every 10 months. And that's been the history of the market for the last 24 years of this century. So if the market has shown its second nature is correction, every 8-10 months, 1 year, it gives you this kind of corrections, which actually brings in more solidity to the market. So I don't think our clients get perturbed, the 11,000 families, because we meet them, the same people, 11,000 repeatedly. If we were selling cars, we would be selling 11,000 cars to different people. But we are interacting with the same 11,000 people. So we are able to transmit the conviction of long-term investing over long periods of time. That's point one. Point two, we don't appreciate so much short-term money. So we actually are great keepers, and we don't let short-term monies come into our system. So you would see long-term intergenerational wealth is what we are interested in managing. And there, short-term volatility actually don't change the direction of what wealth values a family is going to end up creating. And that's something which we sensitize over periods of every month to those clients, and they're not so surprised. They generally, our clients try and use this as opportunities because they are long-term investors.
So apart from the bear outlook that you had mentioned, what is your view on what will happen in the market, or what is really happen, the risks or concerns that you see, especially for the near term in Indian markets?
See, I think the concerns are priced in. That's my belief. And Indian market is a very investor-friendly market, unlike the global markets, because Indian capital markets, unlike what people have generally spoken about, India has a restriction to short selling, and that's a reasonably small short selling limit, which came into existence on 22nd March 2020. So, to answer your pointed question, of course there are uncertainties, and that's why the market is where it is. Point one. Point two, I don't see sharp drops because India does not permit unlimited short selling, unlike most other markets. Even the global US markets don't have any limitation of how much a person can one fine day wake up and without having long positions can create short positions. India, if you have 3 lakh rupees in your bank account where to buy puts of 1 rupee, you can't do that for this Thursday, which is coming up. So I consider India as a far more stable market, and that's why the standard deviations of Nifty have been significantly lower than S&P 500, which is the largest, heaviest weight index in the world. That's because there is limitation to short selling. To answer your pointed question, does it perturb me? The answer is no for a long-term investor. And because we are not at 52-week highs, we are almost about 9-10% lower than 52-week highs. So that's a great way to go into 2025 because you bringing in some degree of returns ahead as well and not factoring in the next financial year also. So I think there is some positivity expected over this financial year. End as well, if not for the calendar year.
Definitely, hearing the word positivity really makes me happy over here in this kind of a market. But coming to you specifically about what should one do at this point in time, any views on that?
I think what should one do is definitely make sure that has his asset allocation right. India hardly has any money in equity. People say that deposits have lost money to equity. That's so wrong a narrative because last year's total household savings, 42% went into deposits, 20% went into PPFs and pension funds. Equity took away only 6.5-7%. That to equity mutual funds. So I personally think that India needs to get the asset allocation right. These are great opportunities to build your equity portfolio. Of course, small cap has taken some beating after a long wait over the last few days. So use that as an opportunity. As long as you have 5-year plus monies, making double-digit returns is a 95% probability. There's no certainty in the world of investing unless you get into an FD and especially a commercial bank, not even a cooperative bank. Then you will not even have your money back in certain cases. So to answer your pointed question, what do we recommend to our clients? Build your equity portion if you've not built it already. Second, don't go into something so fancy like thematic and stuff. Stick to the basics. I think that's where the compounding will happen. Don't be too perturbed about small cap. In India, small cap is not the small cap. Out of the 2,500 companies on NSE, 500 companies cover large, mid, and small, as per AMFI's definition. So what is the small cap? The small cap companies are 50,000 crore market cap. Unlike the English word small cap, you would assume that it's like those 3,000-4,000 crore market cap companies we are referring to, but the word does not rightly represent the size of the company. So don't be too worried when you hear small cap, because in India, the bottom 2,000 stocks are called micro cap, and the top 5,000 cover all the three segments which we generally end up discussing about.
For sure. I love that analysis over there, Mr. Azeez. But are you actually seeing that from the fresh client inflows? I hear you talking about the AUM from clients, but how is your fresh client growth looking like, especially in this quarter?
We generally have a target of adding one client and RM per month, which has not happened for longest of periods. So I think, but we've had very healthy client additions. That's why we've reached over 11,000 clients. And I personally think that adding 150, 200 good quality families every single month and more should be possible for this financial year, the residual financial year, and very positive about the next financial year. Adding 250 clients, families every month seems like very likely for the foundation we have created. Clients have started understanding the difference between a good wealth manager and a great wealth manager, and especially bad times helps you distinguish between the good and the bad. And so we sometimes find it sadly so, but bad times gives us some degree of kicker because we personally believe in managing risk numerically. We measure the betas of the portfolio, the standard deviation, the volume at risk. So to answer your pointed question, we get maximum references during bad times, and that's why, ironically so, but we are very positive about client addition over this quarter, which we are now in, and I think the March quarter should give us some pleasant surprises in terms of client acquisition.